Is this a buying opportunity? It depends. If you're an individual buyer looking for a primary residence, you're now competing with fewer investors than you were 2 years ago. So today we're talking about where home prices are dropping the most in Las Vegas. And if you've been waiting on the sidelines for prices to come down, you're probably thinking this is finally your moment to jump in and get a deal. But here's the thing, the neighborhoods where prices are dropping the hardest right now, those aren't deals, they're warning signs, because what you actually need to understand is why those prices are falling, which drops signal opportunity versus disaster, and where the smart money is actually moving right now while everyone else is chasing the wrong discounts. So I'm breaking down the 3 areas seeing the biggest price drops in Las Vegas, what's really causing it, and which ones are actual opportunities versus traps you should avoid. I'm Dallas Tung. I'm a top realtor here in Las Vegas and Henderson. I track this market every single day, and I'm about to show you what the data actually means beyond the headlines. So let's dive in. Before we get into the specific neighborhoods, there's one critical thing you need to understand about price drops. A price drop and good deal are not the same thing. Right now, the Las Vegas market is experiencing something interesting. 3/4 of zip codes in Southern Nevada have seen home prices, kind of decline year over year. But not all these drops are created equal. Some neighborhoods are dropping because of temporary market corrections. Others are dropping because of fundamental problems that aren't going away anytime soon. The difference comes down to 3 factors. What's driving the drop, who's still buying in that area, and what the long-term trajectory looks like. So let me break down exactly where prices are falling the most and what it means for you. So area 1 is the high-rise condos near the Strip. This is where we're seeing the most dramatic price drops in the entire valley. Most zip codes that saw the largest per square foot median price decline includes parts of the Las Vegas Strip where there are high-rise condos and apartments. And here's what's actually happening. Condo and townhome prices fell to a median of $290K in July, the lowest since April 2024, and down 2% from a year earlier. So that's a 15-month low. Now, on the surface, this looks like an opportunity. You're getting strip adjacent properties at prices we haven't seen in a year or more. But let me tell you what's driving this price drop. It's not a healthy correction, it's a supply flood. Properties without offers have surged 70% compared to June 2024, while months of housing supply climbed to 3.6 months, an 82% increase from the previous year. Translation, too many units, not enough buyers. And there's a reason for that. Las Vegas's tourism-dependent economy is showing strain. Gaming revenue has failed to grow for 5 consecutive months to start of 2025, while casinos' foot traffic fell about 10% so far, in the second and third quarter. It remains 20% below pre-pandemic levels. When tourism struggles, these high-rise condos struggle. Investors who bought these thinking the cash flow on short-term rentals are now competing with hundreds of other units. Occupancy is down, revenue is down. That results in a little bit of panic selling. So this is a trap or an opportunity. For most buyers, it's a trap. Unless you have a specific investment strategy that accounts for tourism volatility and you're prepared to weather low occupancy, stay away from these strip adjacent condos for now. Thinking about relocating to the Las Vegas Valley? Well, I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research from top employers to the best hospitals and boatload of other things that you need to know before making the move. The best part is that this guide is 100% free. That's right, 100% free. Just click on the link in the description or the top pinned comment. Hope that helps. So area number 2 is institutional investor pockets in the North Las Vegas area. This is the one that everyone's talking about, but nobody understands. North Las Vegas has some neighborhoods where prices have softened because of institutional investors, their activity. Investors have purchased over 500,000 homes in the Las Vegas Valley and currently account for roughly 23% of all home sales in that area. And here's what's wild. Investors own approximately 15% of all single family homes in Clark County and upwards of 25% in North Las Vegas. Las Vegas is about 120,000 homes that investors have purchased. So when a quarter of your neighborhood is owned by hedge funds and corporate landlords, what happens? They control the market. And right now, some of these investors are adjusting their portfolios. In October, Starwood Properties Trust bought 151 homes across the valley for $58.2 million, with concentrated pockets in the North Las Vegas and Henderson and in the Southwest, North and Northwest Valley. The average price, about $400,000. Now here's what most people don't realize when institutional investors are buying in bulk at discount prices. That's actually supporting the floor. But when they're selling or reducing their buying activity, prices soften. Now, the key question is this a buying opportunity? It depends. If you're an individual buyer looking for a primary residence, you're now competing with fewer investors than you were 2 years ago. That's actually good news. You have more negotiating power, but if you're an investor yourself, be careful. These institutions have better data, better financing, and lower holding costs than you do. If they're pulling back from certain pockets like North Las Vegas, there's usually a reason. The smart play, look at the neighborhoods where institutional investors are still actively buying. Those are the areas with the strongest fundamentals. Avoid the pockets, they're exiting. So area number 3, overpriced luxury homes in Summerlin and parts of Henderson. This is the silent correction nobody's talking about. Single family homes overall have held up. The median price of a single family home declined to just under $500,000 in September, down 2.1% compared to a year ago when it was, around $485,000. But when you break it down, the data by price tier, the luxury market tells a different story. Homes priced above $800,000 in areas like Summerlin and some parts of Henderson are sitting longer and seeing more price cuts than anything else in the valley. We're talking about homes that were listed at $1.2 million, then $1.1 million, then sitting at $995 or so on. But here's what's causing this is the interest rates. Despite dropping in listings, slower sales caused months of available inventory to increase to 4.8 months. At current mortgage rates hovering around 6.5% to 7%, the monthly payment on $1 million home is a bit crushing. $1 million home with 20% down, 7% interest, that's over $5,300 per month, not in counting all the taxes and insurance. And once you add all that, then you're easily somewhere around the $7,000 per month. Most buyers in that range were expecting rates to drop by now. They haven't, just a little bit, but these sellers are stuck in no man's land. Now, this is a buying opportunity, potentially, but only if you can actually afford it without stretching. If you've been looking at luxury homes and have the cash or financing locked in, this is the best negotiation environment we've seen in years. Sellers are motivated, they're offering credit, they're paying closing costs, some are even buying down your rate. But if you're stretching to try to afford, hoping rates will drop so you can refinance, I wouldn't do it. That's how people get stuck. Now, here's the thing nobody tells you about is price drops. First, price drops don't automatically mean the bottom. Markets can keep falling, especially in oversupplied areas like high-rise condos near the strip, where prices are dropping matters more than, how much they're dropping. A 5% drop in a fundamentally sound neighborhood with strong job growth and low investor concentration is completely different from a 5% drop in a tourist-dependent condo market. Third, the best opportunity opportunities right now aren't where prices are dropping the most. They're in stable neighborhoods where sellers are motivated but fundamentals are still strong. Think established areas of Henderson, parts of Summerlin, and select pockets in the northwest and in the southwest, like Inspirada and Southern Highlands or something like that. Just remember, owner occupancy in high area. All right, guys. Well, that's the full breakdown. Home prices are dropping in 3 main areas across Las Vegas. High-rise condos near the Strip, institutional investor pockets in North Las Vegas, and overpriced luxury homes in Summerlin and Henderson. But remember, a price drop doesn't equal to a deal. You have to understand why prices are falling and whether those conditions are temporary or permanent. Strip condos, avoid them unless you have a very specific strategy. The North Las Vegas institutional investors area, be selective. Follow where the smart money is still buying. The luxury market, if you can truly afford it, now's your chance to negotiate hard. That's all. And if you want help navigating these price drops and finding the actual opportunities in this market, you can reach out to me. I'm Dallas Tung. You can text me or call me anytime and I'll show you exactly where you should be looking based on your specific situation. You can find the information about me down in the description and I'll make sure to guide you in the best way possible. Thanks for watching, and if you found this video helpful, leave a comment and let me know what I should cover in the next topic. Until next time, I'll see you in the next video.